I recently had the great pleasure of sitting down with Dan Dolev, Managing Director and Senior Fintech Equities Analyst at Mizuho. In this conversation, we explored Dan's opinions of SoFi, Robinhood, PayPal, Affirm, and many of the other stocks that we have common interests in. Dan brings a wealth of knowledge from Wall Street and firsthand insights into his fellow analyst colleagues, as well as firsthand relationships with some of the upper management of the stocks that we're actually covering. A big thank you to Dan and his team for accommodating me. But without further ado, please enjoy this conversation with Dan Dolev. Dan, thank you so much for being here.
Thanks, Tanner.
We're going to be touching on all sort of different stocks. So SoFi, PayPal, Robinhood. But let's start off with SoFi with you. What is your take on SoFi? What's the bull case here?
Yeah, look, I'm obviously very bullish on the stock and management, et cetera. I think it's largely misunderstood. I would say like there's a lot of um, there are a lot of bears out there that don't, don't like the stock and they think that the accounting is very, unusual. I think sort of that's really missing the point. The point about SoFi and the reason we're so excited about this is, look, the fact that they're a regulated bank gives them the opportunity to borrow at a very, very cheap cost of funding. They are getting, significant inflows of deposits. They have, significant demand for their personal loan business. They've basically guided to almost no growth or actually decline in personal loan originations this year. They have like huge opportunity to actually like open, the valve and just like, open the credit box and let more personal loans come in, which is going to like boost growth. None of the mortgage origination volumes are in the stock. Almost nothing when it comes to like student loan refinancing. So I think like the skies are going to get really bright over SoFi over the next like 6 to 12 months. And the bears are just harping on the same issues, which is the fair market value accounting, which is completely legitimate in our view. It's not what most other banks are doing. They're doing CECL accounting.
Mhm.
Um, but it's a legitimate way, and the regulator doesn't let you change the accounting, quite frankly. So I don't understand the issue. There's nothing wrong about it. It's just the method they chose to do it. And they're gap profitable and they have like really strong incremental margins. Like I don't understand why people are so negative on it. They choose to be so negative in it, but I think it'll change. I've seen this with other stocks, and I hope to see this with SoFi too.
Yeah, I mean, the idea of valuing this company at just one times tangible book value seems to throw away all their growth. I don't understand it,
I
but
agree.
um,
I
you
agree. I mean, there's this. Let me just kind of there's because I'm in the investment community kind of circles that I talk to, like people on the buy side. There's some very vocal bears out there on SoFi, and it doesn't help the stock, right? So there's some analysts, some of my competitors that I have a lot of respect for, but also some very, very strong voices out there on the buy side community that they're saying, look, I've seen it all. I've seen this. This is going to implode. So there is definitely that side. And I agree with you. One time tangible book doesn't make any sense whatsoever.
some of those guys are in my Twitter DMs saying I'm wrong, and
I
uh,
am sure 100% that they are. I mean, that's what I said. They're very outspoken and very high profile, and they're my friends. But we disagree, and we kind of agree to disagree
sure.
on that one.
So you also brought up their personal loans really quick. I want to talk about originations because they're guiding for a decrease in lending revenue, but so far for the first half of this year, we haven't quite seen it. It Do you actually suspect that we are going to come in at 95% of lending revenue, or where do you actually think that the year's going to end?
I think they're gonna. So we've done work. I don't remember exactly what we have in our model right now because we've been obviously adjusting our model every time they reported earnings, but we've done pretty detailed work. And it's a great point. We've done pretty detailed work that shows you that they can actually grow personal loan originations by 30% this year, and they would still be below the regulatory threshold
Mm,
in terms of the total capital ratio that they need to withhold in order to sort of be okay with the regulator. So I guess what we said is like they could do that.
right.
Will they actually end up doing that? I don't know. I don't have a crystal ball, but they can definitely do that if they wanted to. I think the reason they're not doing it, and I spent a lot of time with the CFO and a little bit with Anthony as well. And the last time we met with them was I think in May, and they said, look, 100% if we wanted to, we could, but we're seeing, and this is kind of repeating what they've said, but it's an important point. We're seeing certain green lights, but also certain red lights. So everything that we're seeing internally looks green. So delinquencies are okay. Um, every tire that you're kicking internally is okay, but they were, at least as of May, a little bit worried about the macro. They were worried about inflation. I mean, God knows all the macro indicators that they were seeing.
Right.
Um, and I think that's the reason they chose not to open the credit box. But that could change, right? So I actually, if I were a betting man, I think it's going to be in positive territory. I don't know how much, but it's not going to be 95% of, you know, last year. I think they're going to remember when they originate loans, they make a lot of revenue because of the way their accounting works and the whole machine works, and they get, they're going to get re-rated. That's again, my view and my hope.
Right. Right. Um, so I want to go on just a little bit because I don't know where you are as a betting man in terms of rate cuts in September, but the market is definitely favoring them. And so, where does SoFi go for their originations? Like, is personal loans going to start trending down once we start seeing, just the slightest amount of rate cuts, and home loans and student loans are going to come back? Or do you guys also look at the balance there?
I mean, I can't predict demand for personal loans. I think from everything we've seen, and we cover Upstart, we cover
Right.
Firm, we cover obviously SoFi, so we cover at least three, and Square, which does buy now pay later, but it's small. So I've never seen shortage, and this goes back to some of my conversations with Sanjay from Upstart. I've never seen shortage of demand for credit.
Hmm.
What I've seen is shortage of supply.
Got you.
So I personally think that if rates come down, I have no idea. I mean, if the market's pricing in whatever the market's pricing in, I think what, 4 rate cuts by next year, or I have no idea, right? That is what's that I can't predict. My point here is like even if they cut rates, or not if, when they cut rates, I don't expect the demand for personal loans to subside. I expect the demand to be really strong, and their ability to lend is going to get better because actually, you know what? Here's the most misunderstood thing about personal loans. And this
Hmm.
is something that I think the market doesn't appreciate for SoFi, doesn't appreciate for Upstart, it doesn't appreciate for any of these guys. And when we figured that inside out, I was actually, wow, we really understand something that we think is differentiated. And that's basically the the delinquencies, right? The delinquencies in terms of personal loans, that goes for everyone, not just for SoFi. They have less to do with rates and unemployment. They have more to do with the I call it the post-COVID sort of hangover of people spending beyond their means. So what happened is COVID, there was a lot of money that went into the system. People were spending like crazy because of stimmy. They were buying, 5 pairs of Nikes and 10 pairs of Adidas and God knows what. Then they depleted their savings. Money got more expensive. They went down to like the lowest savings rate since World War II. Then they were out of cash, right? And then you start seeing the inflation come down, et cetera. But what ended up happening is when they behave more rationally, they spend less. The consumer slows down, which is what you saw, say, in July. But their propensity to pay back your debt is actually going up. So that actually helps companies like SoFi and
Mm,
Upstart and hopefully Affirm open the credit box
right.
and kind of unwind the tightness that you saw, say, in 22 and 23. And I think that's very misunderstood because the common pushback we're getting on SoFi is what happens when like all these like Gen Ys are going to lose their jobs? How are they going to pay back the loans? And I'm like, it's not the jobs, stupid, right? It's like the
Mm,
Clinton analogy, right? It's not the job, stupid. It's the propensity to pay back and the more rational behavior. The job market is so tight that unless we get like an '09 event, I don't expect any hardship in terms of that. But does that make sense? Like to me, this was like a huge insight, and that was, by the way, the reason we upgraded Upstart. Luckily, a week before it went up 50%, but that was, I would say, we just got lucky.
got you. It absolutely makes sense. I want to talk on Upstart as well. That's another name that I follow. I don't own though,
Yeah,
but um, just really quickly because I think that this is important too. All the Wall Street guys are getting together and putting some prices on SoFi, and you guys can agree or disagree. But I think it's pretty across the board that you guys are not agreeing with Anthony Noto and team that EPS is going to come in at 55 to 80 cents of EPS in 2026. Well, is this an unhittable target, or what's going on with the longer term of SoFi?
I actually think. Are you talking about consensus, basically?
Sure, yeah. What does Mizuho have it at?
Uh, if for the long term, God, I don't remember the exact number.
That's
I
okay.
would just say with the 30 to 40, I think, percent incremental margins that they're running, I would take whatever Anthony and Chris are saying, and I would underwrite that. I don't see any reason to think that they're not going to get there. I mean, they were they're earning beyond what we thought they would earn
Right.
today already. They're
Yeah.
gap profitable. I mean, if you want to be bearish, what the bears are saying, and that's why maybe they're not agreeing with this kind of like flips to what you were saying. What the bears are arguing. They're saying SoFi, there's a pull forward of gap EPS. And
Yeah.
let me just explain that. Because of the way they do their accounting, again, if you're bearish, I'm not very bullish, you're getting paid instantly for originating loans. And so you are basically earning a lot more gap EPS today than you would have had you done CECL account. But what
Right.
I'm saying in exchange, that's a fair pushback. What I'm saying in exchange is the business is growing really fast. They have no shortage of personal loans. All these other revenue streams are coming in and they're massively profitable and they're getting in deposits. I give them my money. I bank with JP Morgan and I gave them money because of the high interest rate. So I trusted them with my own deposits. So all these things together, I think, are going to basically mean that the bears are being just, I'd say, a little bit too conservative and too suspicious that something's going on. I actually think the business is doing really, really well, and you will get those high, gap EPS numbers. I think the next couple of years. I'm
I
not worried about it. It's going to be like this is the only branded. Like, just take a step back, right? I mean, this turn sun is it okay now?
Oh
Just
yeah.
adjust it.
Yeah, you're good.
So this is the only branded non-branch successful non-branch, branchless bank in America that really is making it with like the mainstream. I mean, I have people in my industry, uh, really successful people that have put their money with SoFi and are banking with SoFi. So, they're voting with their wallets, so to
Right.
say. And they're very savvy investors. I mean, you can only imagine like a PM at an XYZ hedge fund. He's no dummy.
Yeah. Yeah.
And he's putting his money with SoFi, then If he thought there was any chance of all these things being true, he wouldn't be doing that.
Yeah, absolutely. No, I completely agree. On the stock side, is SoFi diluting a little bit too much?
In terms of what? In terms of
Just their share count. I mean, they've few acquisitions, Technisys, um,
yeah.
then the convertible note, then um, you know, stock-based compensation at what, 10+% of revenue. Is that going to become the next bear case?
I don't think so. I think it's. I mean, the convertible note was a home run, right? I mean, they got, and it's kind of a little bit. It's like 6 months ago, so I mean, I don't have like every little piece of detail
Yeah, yeah,
top of my head. Just kind of. I think it. I mean, look, they're gap profitable, and
yeah,
so we're debating. Uh, we're not debating no non-gap profitability versus gap profitability. We're debating like a little bit more gap versus a little bit less gap on the very high incrementals. So I've not heard that as being honestly. Let's take a step back here. If this was the debate, we would be in a much better position today. The stock would be at like north of 10.
yeah.
If this
Well,
was the debate is one level above it, which is this a real business? Right? Like we're not debating the gap. We're not there to debate the gap PE. I wish we were. And I think we will at some point, but now we're debating is this a real business and there's anything like is there anything wrong with the accounting that's going to backfire someday? Those
yeah.
that's where we are. That's why the stock is trading at, what is it, one times. You've seen a massive bifurcation between them and let's say Lending Club, which is often viewed as a comp from a not from an accounting perspective, but from a fundamental perspective.
I mean,
That's yeah.
man,
And
I
I
get
don't
the
cover
bear
lending
case.
clubs, so I don't have a view on them. But there's been a fact is the stocks have bifurcated recently.
I get the bear case from Wall Street. I mean, I just find I read the reports. They say, oh, well, if they didn't sell these late stage delinquent loans, then they would come in at, these delinquency rates. And we suspect that they're going to come in at 6.7 to 7.1% next quarter. And then they
Yeah,
don't. And then they destroy that outlook. And then they diversify even more. And lending comes in at like 57% of revenue. So every quarter that you're putting up these numbers, it becomes less and less a problem. I don't see it.
yeah. It's just, that's because we're not even because we are because there's like a there's like a bigger issue for investors, which is the fair market value accounting
Sure.
or fair value accounting. It's called. And so they're not open to uh, appreciating all these great things that they're smoking every metric,
Right.
and yet the stock's not working. So you need something else to happen. I don't know what it's going to be, but there's going to be a moment in time where I've seen this before. I mean, this is where experience comes in. I've seen this with like Firm. I've seen this with Robinhood. It's going to happen. It's just a matter of when, if
Yeah. You're talking about a re-rating or sort of
a
a
re-rating,
revaluation of the stock.
a re-rating of the stock. Yeah, where people are going to say, okay, fine, it's a real business,
Yeah.
and I'm not worried about it. I can live with with this accounting, and I can underwrite, you know, like that. This is going to be a much bigger bank in like 3 years. And you said Technisys. I mean, that's an important business for them to sell banking as a service, right? And Galileo is doing great. They're gaining account. I don't have like the facts in front of me again. I didn't prepare a specific SoFi presentation for today.
No, no, that's okay.
But
That's okay.
we can get into the model. I have to open it. We can go into every detail. But my point here is like general terms. Uh, if you think about the way they've executed flawlessly. Yet the market keeps on picking on these, like small, not small, but your point, yeah, like delinquents. Oh, if they not had they not sold these loans, then they would have done this. Had they not done the convert, it would have been that. The convert was great, right? It gave them a much bigger buffer right? Think about the buffer between the required minimum from a total capital ratio. I think it was like in the low double digits to where they are today, which is like 16 or so percent.
Yeah.
So it boosted their buffer. And isn't that's what you wanted, right? That's what
And
you
now
want. You want that to happen.
you spoke with Chris Lapointe about this issue. What is the amount that they receive on this? Because I think they said low double digits back from these parties that they're selling these late stage delinquent loans. I'm thinking 20% they get back on the principal that they originated out. I mean, did they talk specifics?
I don't remember specifically about it, but it's like it makes sense to me. Like it's sort of like the analogy here is you're basically getting rid of the bad loans
Yeah.
at a good price. Like and someone else can maybe do something with them. Why is that a bad thing?
Yeah. Yeah.
It's only a bad thing if people think that they're hiding something kind of sinister behind it, which is zero grounds to think that that's the case.
Right. Right. Especially whenever they tell you what their defaults would be with or without that
Yeah,
transaction even happening.
and they give you that chart, right? So if I can go back and sort of my visual memory, they give you that chart, which is the lifetime loss of the loan that stayed very, very consistent over time.
Right.
So it's not that there's an issue with the lifetime losses of the loans. They're very consistent and very predictable. But people choose not to see through that and not grant them the multiple that they should be granted. But that's the debate, right? It's sort of like at some point it might change.
Yeah.
You never know. There could be the rate cut that would change people's views, or um, I really I really need to think more deeply about this to understand. It's like you have like a great company waiting for a multiple. That's kind of if this was like a dating website for stocks, I would say the buzzword was like great company looking for a multiple.
Yeah. So okay,
It's
so
much
let's
better than a bad company, you know, trying to get rid of a high multiple. So it's like a much better prompt to have to solve. It's like great company looking for a better multiple.
um
To live happily ever after.
yeah. So
Like
your
Bumble for
price target
stocks.
on this stock right now is $12, I think.
Makes sense, yeah. I think
Okay.
so.
Um
I can
now
look exactly, but yeah, it sounds about right.
now other
It's
companies in
higher than
similar
where it is right now. I can guarantee you that. It's
yeah.
more than $7. I think it's going to go into the double digits. Yeah, 12 something.
um Then you have other companies in a similar space selling loans. I mean, Affirm's there, Upstart is there. Why do you think Upstart is getting such a massive bump right now on the idea of rate cuts versus other companies like Affirm or SoFi?
Yeah. So let's take them one by one. Remember, Upstart was like the most hated stock out there. We had an underperform up until like a month ago.
Mm,
We had an underperform for almost 2 years, and it was the right call, right? I mean, kind of going back to that discussion about declining, uh, like the post-COVID hangover, and you're going over that. I call this sort of that's the 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 mountain of pain that you have to kind of work your way through that in terms of the post-COVID. So people's behavior catching up with their finances. As their finances got depleted, the behavior didn't.
right.
At some point, the behavior caught up with the finances, and that's like maybe closer to like maybe June, July. That's why I think you also saw like Visa talk about like more muted consumer, for example, in July, right? Now, that's all just backwards looking. The reason I'm bullish and the reason we upgraded it is you literally saw each and every couple of things. You saw this pre-quarter and it actually ended up materializing in the quarter. You saw delinquencies kind of starting to sort of inflect negatively. But negative is good for delinquencies, right?
Mhm.
You saw that. So what we did in our team is we basically went and looked at like a ton of their peers. We looked at all the consumer lending bank, like all the, like the Capital Ones of the world, etc. You saw that same trend. You saw that we mined their transcripts. So in the transcript, they were talking about like a more, conducive delinquency environment. you saw their own index. So they have this thing, it's called the UMI index, where
Yep.
less, it's sort of, if I had to like make a commercial, like the UMI index, where less is more. So where low is better and high is bad. So the UMI index, which they publish on their website once a month, has been going like this. And then last but not least, FinWise, which is a public, I think about like 70 or 80% of the Upstart loans kind of get originated by FinWise, right?
Mm.
So you could actually track FinWise's financials, and they reported shortly before Upstart, and you kind of saw a plateauing of the delinquencies in their loans. So you had like like 4 or 5 different data points that should suggested that the environment for Upstart is getting better, and the reason the stock's kind of going up so much, basically, actually went above my price target in like 2 days, and I was straight high. It's because of that torque. There's just so much torque on Upstart. When it's good, it's a multi-month, hopefully multi-year cycle of good. If it's bad, it's really bad.
Yeah.
So it's just very volatile, and now we're entering a period of like really good for a really long time.
Now, do you the one of the concerns that I have with Upstart
Sorry, was I
is
talking too long?
no, no,
That
it's
is
just
good. Okay, yeah, yeah. I just want to make sure I'm excited. It's
no, no, no.
exciting. It's it
I
worked. I wish SoFi would work like Upstart. I mean, literally, we upgraded a week before a 50% move in the stock. Like that timing couldn't have been better. We got, as I said, very lucky with that.
absolutely. I'm like I love the whole idea of Upstart. The problem is it's such a black box to me of whether their models are even making better loans than what a SoFi could originate themselves or something like this. So, and how do you, as an analyst, underwrite whether it's working or not? Because
Mm.
if it was my understanding that there's been environments where it's worked worse than traditional, um, you know, underwriting
Yeah,
standards.
it's a cliche. I hate those, especially like with Nvidia reporting tomorrow. But if you're talking about an AI edge, then those are your guys and girls. Upstart, right? Like think about them. They're the ex Google guys
Hmm.
that went and founded Upstart. So there's a lot of other lenders out there, but they're fighting with swords, whereas Upstart is fighting with like an F-35. So it's the different. It's an asymmetric warfare. So think about FICO. Let's go back to the basics, right? FICO. It's a linear regression of like 25 variables, right? Think about that's the swords, right? It's coming in and like fighting with swords. And then Upstart comes in with, AI, data scientists, um, I'll throw in every buzzword that I know. Like,
Yeah.
what's the latest one is hyperscalers. I don't know. I'll just throw in a bunch of words to sound really, really, really smart, and then I'll name drop some people, and then I'm good. No, but you know what I mean? Like, they come in and they have like every um, you know AI engineer that you want to hire, so they can outsmart. It's called outsmarting FICO. I really believe in it. I think that's what people also misunderstand. It's like there is a better way to underwrite than a 25 variable linear regression that's been around for 50 years, and that's what they're doing. And by the way, that's the same thing a firm's doing.
So let's go to a firm.
Yeah,
I
I
think
just published a note on them today. I don't know if you had a chance to see that, but
no, I didn't.
we did like a not nothing to do with delinquencies, but we did a mega deep dive that basically said that we think that they're reporting tomorrow that they can actually I don't know what they're going to end up doing, but we think that if they wanted to, they could guide to exiting fiscal 25, which is basically June 2025, gap profitable. So we have a very detailed bridge that shows the clear path, still conservative, to gap profitability by the end of 25. And if they do this, I think stock this could be like um, multiple impact on the stock.
Mm.
if they actually say that. I don't know if they're going to say it. And again, I don't know what they're going to say about volumes for next year, but I know that they can say it if they wanted to. Does that make sense? But anyway, that's a note of today, just coincidentally.
Um, so I follow a lot of companies in their space. I just wonder how. I know that you look at a lot of the ancillary products as well, right? The actual card. I've heard you mention on a couple of the earnings calls the deposit accounts that might be coming, or I
Mhm.
think they're betaing. They're in beta right now. Some I could be.
There, it's out of beta. It's like it's. You mean the deposit is in beta, not the card. Sorry, the
Yeah, the
deposit.
deposit. I
So
know the
that
card
yeah,
is.
yeah, yeah. The card is out there.
Yeah.
The deposit is still like very small and still in beta. I agree.
Right. But their core product, the buy now pay later product, and I'll be real with you, the only buy now pay later provider I've ever used is Affirm. I've got a loan out with them right now. It's 0%. Why would I not take it? But
Yeah, I agree. They're the best at what they do, and the evidence is after 2 years after they started, Apple capitulated and gave the business to a firm. They voted with their wallet as well.
now what about the likes of some of the big banks that can underwrite Visa doing it direct in card, PayPal.
Yeah, look, I'm very bullish about PayPal. We haven't talked about it yet, but not so much for buy now, pay later. Look, there's when you're a couple of things I have to say. The credit market, there's the e-commerce is what? Trillion, 2 trillion, you name it, right? You can throw in any number that you want, right? Credit is like just US credit is what, 6, 7 trillion, not more, like in
Okay.
terms of the annual volumes that go through between Visa and MasterCard on credit, right? Even examines. Buy now, pay later on a really good day, a really, really good day in the US is 80 billion in volumes. I think the firm tested at 60 billion. So you're talking about the very early days of the industry that's gaining share in a like massive TAM. So I think there's room for growth for everyone, whether
Sure.
it's, PayPal, whether it's JP Morgan, like there's just, or Afterpay under Square. There's really room for growth for everyone. There's one thing that a firm does better than everyone else, and that's that intersection between underwriting and branded marketing. To your point, like why would I use anything else? Because they're right there, embedded in. I don't shop online. My wife does all that, so I'm kind of like I'm not a. I don't know what I'm talking about in terms of online shopping, but they're embedded in all these websites and all these apps that you can actually go and finance with a firm. And they do a great job in underwriting. In all my meetings, now it's time for me to name drop, like in all my meetings with Max and Libor, which is kind of a funny name for someone that's in charge of like credit. His like name is Libor. I don't know. Like he was born to do that. It's like wow. you know. Um so in my meetings with them, like they say, look, we have millions of data points. We have like a decade and a half of data, and we're in the business of taking risk. That's the I think that's what Apple didn't understand. They thought, oh, buy now pay later, we can do it, but obviously they couldn't because they're in the business of selling like these amazing iPhones, but they're not in the business of taking risk, balance sheet risk. And it turns out that's a trait by itself. It's not anyone can do this, right?
Right. Right. I mean, I've been blown away by their underwriting. I don't know what the secret sauce is. That's always the problem with this industry is that the underwriting part is a little bit of a black box until you actually see the numbers. But um, Max is doing something incredible, and
It's
if
genius.
he is a genius, I mean, he's the original fintech guy.
He's a stable genius, unlike some other executives in our industry.
Sure.
It's like
Um,
like Trump.
did you update a price target whenever you released the note today?
No, we actually, but we have a 2x
Right.
I mean, we're at 65. I mean, honestly, we didn't even update our numbers. So this note today was a pure, and sorry, my kid just walked in. That's why I was looking around. Believe it or not, we're going fishing in the East River after this. It's my evening pastime with my kid. So fishing for ideas. But the you know the analysis today was purely hypothetical, right? It was purely hypothetical because it's not appropriate, I think, in my view, to like change numbers on something that I have no clue if they're actually gonna how they're gonna guide. Just all we said is like if they wanted to, this is what they would do, right? And
Gotcha.
so, but we have so much upside, and like the cards off the charts. That once that thing gets out of beta, the stuff you mentioned, the direct deposit, there's like a 5 to 6x multiplier on engagement.
Right.
So the volumes on the card, like tenor, with direct deposit spends 5 to 6 times more on the card than tenor without direct deposit.
Hmm.
And I think like you're basically like there's this movie. It's called like whatever I forgot, but it's like they're coming in to they're paying they're they're coming in to buy land, and they're saying we want to buy land for to hunt quails, but they're really buying the land for the oil. That's what you're doing. You're paying
Gotcha.
quail money, but you're gonna get the oil. And so the quail money is like you're paying buy now pay later dollars, right? You're like I'm invested in a buy now pay later company. And the biggest pushback I'm getting from investors is I can't value this. I don't understand. It's too expensive. What's the right P? I'm like, you don't understand it. This is a much bigger, this is going to be a full-fledged financial services company in like
Yeah.
3 to 5 years. And they're planning, and even company says like buy now pay later was a way for us to basically get our name out so that a firm and I know a firm, everybody knows a firm, but now they're going to do deposits in the card, and God knows what they could be well, I don't want to say bank because that's a little bit frowned upon. Like people hate banks because of the multiples, but they could be like some sort of a banking as a service, full-fledged financial services company with a huge brand. So I think it's it's like
Akin to
the
more of
early
a
days of JP Morgan.
akin to more of like a Venmo or Cash App, like
But arguably monetizing better than Venmo. I love PayPal. If I could bathe in PayPal, I would do it. But Venmo is not monetizing
no.
as well as they should. And we can talk about that too. I mean, there's a lot of ideas of what they could do, but a firm just does like it's a step by step thing and it's a multi-year plan. I think we're in the early innings of that. And that's kind of the most important to think about it. And the step function could be, we'll talk again hopefully tomorrow, if they actually end up guiding to that gap thing and they don't guide too conservatively on volumes, because that's the fear in the institutional investment community. And I've got like probably like 6 to 7 emails today on like, oh, I'm worried. I like your note and I agree with your gap analysis, but I'm worried about volume guidance.
Right.
I get it. So if they can like, I actually happen to think that there's almost no chance that they'll guide conservatively, but we can talk about that too. But that's kind of rationalizing it. I can give you my little
Yeah.
rationale on it.
I don't know the numbers of a firm nearly as much as I do a PayPal or a SoFi or something like this. So I have no idea what they're even
Well,
expected to come in.
it's just more about are they going to guide? I mean, look, think about it. They're giving you first fiscal Q1. They're 2 months into the quarter, so they kind of know fiscal. They know 2/3 of fiscal Q1.
Hmm.
So um, that means that if they guide, this is just like thinking through this. If they guide conservatively for Q1, people are going to be like, wait, are you telling me that September is going to be a disaster?
Yeah.
Because you know the first 2 months already.
Yeah.
Now, if they guide aggressively for Q1, fiscal Q1, and then conservatively for the rest of the year, then people are going to say, oh, you're telling me there's going to be a big slowdown for the rest of the year? So in that game theory, you'd almost it almost inevitable for them to guide really strongly for both Q1 and the year But again, I don't know if they're thinking along the same lines. And I'm sitting here talking to you because I'm not doing strategy for the firm. Maybe that's a good thing. But this is just my. When is this going to air? After they report or before?
I'll probably get it out before.
Okay, then hopefully I'll just look like an idiot and not regret saying it.
Let's move on to PayPal. Maybe one of those positions that you said, buying the land for one thing, but really getting the oil.
Yeah,
Um,
you're paying quail money and you're going to get the oil. I mean, this is PayPal is probably the biggest steal of all, right? You got like let's just talk like step by step. So what's the biggest fear in PayPal is they're losing share to Apple Pay. In fact, they're not. They're growing in line with ecom on the websites which they service. Remember, they're not on Amazon, right? They're not on some other websites, but on the websites where they are, they're growing just in line with ecom.
yeah.
There's a lot of people in the world that are not on the Apple ecosystem. So we look at it from a very, East Coast, West Coast kind of my friends, my family, my clients, everyone has Apple, but there's a lot of people that don't use it. And especially internationally, there's a lot of people that rely on PayPal because they don't trust other ways, other means of online checkout. But that's just kind of the basics. That's the quail money, right?
Would
Where
you
the
say they
PayPal
are?
2.0, yeah.
Sorry, I was going to say, would you say that they are losing
No,
market share more on the Braintree side?
no, not at all. Actually, they were they went into a price war 2 years ago with
Hmm.
Adyen, and they crushed it. And that's I think again I don't cover Adyen, but I think Adyen missed a quarter or a semester like a year and a half ago because of the price war.
Yeah.
Since then it recovered, but guess what? Now they have this new product called Fastlane. We think this is basically because I think the statistic is like 60% of e-commerce checkout globally is still down through just punching in your credit card details.
Yeah.
And so they have a product that actually, because they have a vault of like 800 million users globally, they can know exactly, oh, this is Tanner.
Right.
We, um, within X% probability, we know it's Tanner. We're going to let him check out.
Is that a true statistic, by the way? Is it 800 million people are on
Yeah,
their
800
vault?
million. No, they have 300 million users,
Yeah.
but they have a vault from
Yeah.
all the users they've ever had in the past of 800 million users that they
Wow.
kind of know who they are and they know enough about them that they can actually triangulate and figure out, oh, Tanner, okay, Canada, Tanner, okay, I
Yeah.
know, right?
Yeah.
Versus Tanner, Malaysia, when something doesn't make sense,
Yeah.
right? So they sort of know, right? And what we did is we kind of you trickle that through and you kind of look at sort of and again, the TAM is infinite. The TAM is like, well, a billion, a trillion and a half, X Amazon, X China. You're still looking at like a trillion and a half of TAM for fasting. And so we put that note out. This is when we upgraded them. This was like a few months ago. And again, there's a big debate. This, da, 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 da. And now, like last week, um, basically Adyen is partnering with PayPal and is adopting Fastlane.
Yeah.
So it just shows you Adyen's a fine company. I don't cover it. I don't review, but high quality is kind of what we're hearing out there. And there's a lot of people that praise them, but they ended up partnering with Fastlane. And I'm thinking, well, if they're partnering with Fastlane, that must be a really good product that they
I'm
could
not
recommend.
as big of a fan on the news as potentially Mizuho is. I think personally, I'm a super fan of Adyen and the team, but they partner with every single local payment provider that there is.
Yeah, no,
So
it's a fair feedback, and again, I don't, I'm, and I again, it's just fair disclosure. I don't cover Adyen. I don't have a view. I don't know. Just for the record, I'm just saying like a a huge e-commerce checkout company
yeah,
partnering with Fastlane tells me at least that it's not a shitty product.
no,
It's at least it passes the sniff test of being okay. But I think it's better. So the math that we did, but that's a very good data point, right? If and I again, that's where you have a wider breadth of knowledge than I do. I haven't spent any time like I should probably spend more time on it, and I just didn't get to it. So my point here is, uh, per our numbers, this could be like a billion, like call it 2.5 billion of incremental gross margin dollars. So you're talking about, potentially
Wow.
10% upside to growth over the next, like, I don't know, 18 months or so, if Fastlane continues to grow. So and this is, again, this is still quail money. I think where you're getting like oil land is if they turn this thing into like a B2B powerhouse. Remember, CEO came from Intuit. He built their SMB business. PayPal
Yeah.
has 30 million. That's the oil, right?
Yeah.
Everything until now is quail. The oil is, you know, if he manages to take like the 300 million somewhat users and the 30 million merchants and really kind of almost replicate what he did at Intuit at PayPal and do it on a global basis, I mean, then it becomes a software company. And now we're talking about a re-rating, not like a payment company. I think there's like a reincarnation of, without the religious kind of context. Like there's, no one's burning in hell at the end of this, but there's a reincarnation of PayPal coming to us, and people are starting to wake up to this. We're starting to get calls from like bigger long only investors, like trying to looking. There's a long muscle memory on the long only community of making a lot of money in PayPal back in like 2018, 2019. So it's very, they're open minded to hearing about PayPal, but they're like, wait, I don't use it. How could it be a good thing? Because I
Right.
use Apple Pay. So
Right.
there's that dissonance.
Um, have you sat down with Alex Chris?
We exchange emails. I haven't met him yet in
Okay.
person. We've been we're pen pals, we're like pen pals.
And
Just
PayPal.
exchange. Yeah, we're pen pals. Like
Uh,
it's just we've been just exchanging emails. Like I congratulated him on the quarter, and he was very nice about it.
I've
Have you
deep
met him?
dive him as much as possible whenever he was coming onto the team, and everything I could read is that this man is at like as much of a visionary as you could possibly imagine. Yet, um, whenever he came out to shock the world, I was a little bit disappointed uh, with his wording and some of the things that he
I
like the way he phrased it, and then the products that came after it. I know payments decently well. I knew that there was not going to be a shock. There's not a whole lot of shocking things that happen in payments. Like,
No, I think this was I I think today, in retrospect, he would have not said it. I think he was just maybe new in the
mm,
role, and sitting in front of, I as I do this a lot. It's you have to it's experience to sit there and like get, you know four experienced anchors like shooting questions at you. So it's a matter of experience, but I think he learned really quick, and now he's managing expectations really, really well. Probably the, I'd say, top 10% of my coverage. PayPal's managing expectations like flawlessly right now. Like the
yeah,
news flow is perfect, and they're very measured, and they kind of kitchen sunk the guide. And so now they can like beat and raise. They crushed it on gross margin growth, gross margin dollar growth this quarter. It was up 8 in our preview. They said flat. Q2 was up 8, flat for the year, and they're
yeah,
already up 8. So it's obviously something good is happening there. And I've gotten great reviews on him from operators as well. So I'm friendly with some people that either worked with him or know him from the industry, and they're like, this guy specializes in what decisions to avoid.
sure,
Cool.
sure.
That's the best feedback you can hear.
Yeah, he was I think the main um, decider behind the Mailchimp acquisition at Intuit. So I think whenever he was originally coming in, I was a little bit concerned of maybe some larger acquisitions at a time where I think people really wanted him to buckle down and just focus on PayPal branded. And then whenever he did come in, it was quite the opposite. I think they were getting rid of a bunch of like what's it called, Happy Returns, and all these other very small ancillary businesses that PayPal had. So I think he's doing an amazing job so far, but glad to
I,
hear that
I agree.
Mizuho shares that sentiment.
Oh, I agree. I mean, remember we downgraded and then we upgraded, and I feel like this is probably one of the best. turnaround stories in payments, period.
Let's go. There's two more names I want to touch on, so we'll try to
Sure.
bang through them as fast as
Yeah,
possible.
yeah, yeah. No rush. Fishing can
Robinhood.
wait under 5 minutes.
The So on Robinhood, how do you guys view the company? And then after you answer that, what do you think about the Robinhood Gold card? Because I have some strong opinions of it.
I mean, we've been early in this story, and I think Vlad appreciates that too. We've always said that Robinhood is kind of a singularity. It's one of those apps that every Gen Z, Gen Alpha, whatever skibbity generation you have knows about it. Um, Everywhere, you go to like Europe, people know. So people don't know. I know as much as I love Square, people don't know Square.
Right.
Oh, it's the guy from Twitter. Oh yeah, yeah, yeah. I know him, right? But people don't know. It's like Tesla, it's like Apple. It's a brand that people know for, a little bit because of what happened with Rory Kitty and like the 2020, 2020, 2021 era. But they can go to every region in the world, and then Vlad is talking about that too. They can go to Europe, and then they can go to Asia. They can open up Robinhood, and people download the app and trade immediately. So it's and so that's already a great place to be. They don't have to convince people that this is a good trading platform. Now, they've really grown, and if you look at the last, few quarters, more than quarters at this point, forget the profitability. That's set that aside. But
Yeah.
look at just the look at now they're gaining share in we want to talk about the gold thing. Now they're like gaining, IRA share. They're
Yeah.
getting deposits in. Um, the payment for order flow, which was, the debate 2 years ago, that's sort of off the table. Gensler basically said it's not canceling that. So I think they could be a sexy Schwab. They already are, but they could just kind of like grow in terms of those users. It's not just going to be the Gen Alphas and Gen Zs. I think they can sort of grow with them, and this could be like a large broker dealer, like one of the top biggest broker dealers over time, because they're the best at what they do. They're the best at like making it fun and easy to invest. And that core doesn't go away. And on top of that, they're getting all that stuff. But he wanted to talk. That's kind of my general view is they have like unlimited growth opportunity at this point.
Um, you brought up them growing in deposits, IRA. Do you like the way that they're sort of incentivizing that growth by, you know, paying a percent out for deposits, paying 3% out for IRA matching? Is
Yeah.
that
If I
sustainable?
if I had money, I would give them my money. I mean, it's great money. I mean, I was thinking for every million you get like 30,000. I'm like, I wish I had that to give it to them. Um, Unfortunately, I'm stuck in real estate. But but the it'll work over time. But I think so. It's a great strategy, and I've heard again. I don't cover their competitors, but I've heard it comes up in like the Schwab calls, right? So I think that the industry is getting worried. I think it's a great way to lure people in, and once you have your money in there, then you can start. You trade more. It becomes your top of wallet, and I think that's the strategy. The strategy is to just aggregate more and more AUM, and I think it's a good. I mean, it's a simple DCF at the end of the day. If the lifetime value of the customer can exceed what they're paying out,
Sure.
but so far, I think they're doing a good job. Unless you've done work that shows that this is a total disaster. I have not seen evidence that I've seen it just being.
No, you know what? I don't think that at all. If you're doing it profitably and margins are expanding, I don't have a problem with it. Um, I'm just such a fan of companies like Nubank. I was telling you earlier, but because of the less competitive nature that they're in Latin America, they just don't have to pay for any of these things. They don't even do incentives for direct deposit. They don't do any of it. Their credit card at most pays a 1% cash back. Like, so I just wonder about the space in general of now we have to bring up cashbacks to 3% and deposits up to 1 and IRA mat. And then is it all just a race to zero? But that's all.
Yeah, no, it's good. I mean, it's a different market, and I don't. have a view on Nubank, and I know also, again, same with Adyen. I've heard it's a great company. I don't have a view, but it's a different. You have to think it's a different. Once you like go into Latin America, it's a different world.
Yeah.
It's a
Yeah.
great world.
You got
It's
you
just
got
it's a
political
different.
risks, you got currency risks.
Yeah, exactly. You've got a lot of other risks, but also a lot of other opportunities when it comes to payments, right? If you think about sort of like Pix, and it's like it's a different. The beautiful part about this, it's not like software, which is the same. You open the PC in America and you open the PC in Brazil, and you see these same exact windows. In payments, it's a totally different world. Once you leave to a different region, you go to Germany, they're opening cash. It's like very different. So it's an interesting. It's almost like like a language, right? You get a different language when you have a different way in which people transact and save and trade. And if that, sorry to be too philosophical about it, but
No, no, it's all
uh,
good.
it's it's an opportunity. But again, I think that no one's doing a better job than Robinhood right now at capturing sort of the zeitgeist of sort of the American um, sort of next gen trading.
Yeah, the active
Happening.
trader market is getting
Yeah,
dominated by them.
think about this. Like, I'll give you like last famous words. Like 3, 4 years ago during COVID, there were a bunch of other Me Too's, right? Robinhood Me Too's, like whether like just we're like the Robinhood this, Robinhood. They've all faded.
Mm.
You just have one Robinhood. It just shows you, right? The lasting, the dominance of this brand. The Me Too's are gone.
Yeah, yeah. Um, let's wrap it up with a Coinbase.
Yeah, I know. It's like, look, I mean, we haven't underperformed. I have to let me start with giving them some praise. Surprise you with some praise. I think they've done a great job with this, software and services side that's been growing. It's becoming a bigger part of the mix. Um, some of it is like a lot of it is like interest rate related, but it's definitely something that you got to give them credit where credit is due. My bigger concern on Coinbase, two concerns. One, and again, this hasn't materialized yet, so I'm kind of looking like an idiot. Um, is I think it's an exchange, and kind of going back to our conversation on Robinhood. Before Robinhood came in, people used to charge $30 a trade for
Mm.
equities, and then it went down to 25, 20, and now it's zero. So I think eventually in crypto, we can debate crypto for another 10 hours, but I think eventually in crypto, in take rates are gonna come down over time. I mean, literally Robinhood lets you trade the same token, whether it's Doge or Bitcoin, at whatever, 30, 40 basis points versus multiples of that on Coinbase. I think that imbalance is gonna have at some point. And that's my biggest concern. And after giving them the kind words on the software and services improvement, which is great to see. I mean, I'm not a hater. I just think the business model has risks.
I 100%. I don't hold Coinbase. I 100% saw your um, takes on Coinbase in terms of uh, you know ETFs potentially being cannibalistic to their current
Mhm.
product, and whether that brings much lower take rate there, and also this race to zero in such a new asset class. I completely agree. Now, do you foresee uh, crypto going the same way as your opinions on Coinbase, or is it just at Coinbase as an exchange thing? Like, how do you feel about Bitcoin, Ethereum in general? Are you uh, bullish on those?
Look, I mean, I'm not a Bitcoin or crypto strategist, so I don't like. I personally, I, I don't have a view on Bitcoin, but and it's a commodity. I like productive assets.
Gotcha.
I'm kind of stuck in real estate now, but that's my problem, right? But productive asset is an asset that produces a return, a yield. My concern is that there's a little bit of a kind of a problem, let's say, with crypto, which is it's only as good as the next guy that basically is willing to pay a higher price for it. So I don't know. I guess I get the whole point about inflation protection and all that stuff. That's very, very valid. And I still don't have a good answer for, oh, what about gold? Gold. I've seen, this is the only, I mean, I'm at some point I'll figure it out. I don't have an answer for this, but I think literally my worry about Bitcoin, and I really don't have a view, is that there is no yield support. And when there's no yield support, we've seen what happens to stuff when there's no yield support. Like, go back to like the dot-com bubble. I'm not saying it's a bubble. I'm saying there has been cases before where when there is no yield support, this is why it's so important that the firm is going to be gap profitable. And it's so important why Robinhood is gap profitable, because those are real businesses that produce a return. Put money on one end and the invests after investing and taxes, there's money coming out as an investor, and then you can reinvest it, or you can like pay a dividend, or you can buy back shares. You can do a lot of things that doesn't exist with Bitcoin. But again, I have no view. I personally own about $10 worth of Bitcoin. I one time went on Coinbase, or I think it was Coinbase, to check it out when we started
Covering it.
and I was like, I got to see what it's like. And then I bought like, I'm probably down or probably break even. I bought $10 just to see how the app works. And that's as much, that's like my Bitcoin holdings. But
Well,
I don't have a view. It makes me laugh sometimes, like an ETF on something that has no yield support is like kind of, it's sort of, um, it, it, it feels a little weird to me, but I've been wrong.
I
Started
appreciate
with
you
Bitcoin in the 60s,
not
but
having a view and then giving us a full view
no, I don't have a
of
view in
how
the
you
sense
see
that
it.
I don't know where it's headed. I'm just saying I am concerned with the yield support of this. So, I mean, my view is that I will personally not want to have exposure
Sure.
to Bitcoin, but I've been wrong from 20,000 to 16,000 on this one. I just don't know. My point in not having a view is I don't know if it's going to the moon, or
Yeah.
it's going back to 20,000, or it's going to 5,000. I just don't know that. I have
Hey,
no idea. I have no
I
idea.
I
My
I
crystal
respect that
ball
take.
is off these days. It's broken.
I don't mind that at all. I think I am crypto bullish for select coins, but not Coinbase.
Yeah,
However,
I hear that a lot. No, it's a good view. I mean, and I think to kind of the problem right now for a skeptic like me is that Coinbase is highly correlated with Bitcoin. I mean, the correlation is like insane, right? So you could be right all the way to the everything I was saying about take rates, but that correlation hasn't broken out. I've been doing this long enough. There were days, and go back after this, you know, uh, podcast, which I enjoyed a lot. So thank you for inviting me. And go back to like 2017, 2018, so the first bull run in Bitcoin. You know, because there was nothing else Square in the early days, because of the Cash App, and because you know Jack Dorsey was like a big Bitcoin, still is a big Bitcoin
yeah,
proponent. It was the correlated stock, and so they basically traded in line with it was up when Bitcoin went up the first time to 20,000. Right? The reason I mention this is because those correlations can come and go, and so I understand where you're coming from. So there could be a scenario where Bitcoin goes like this, and Coinbase doesn't follow suit, and that's maybe then that reaffirms my underperformed view on Coinbase, that in either scenario there is risk that the stock's not going to work if that
yeah. I mean,
correlation breaks. Hasn't happened yet. Stock's at what, 195. I mean, it probably tripled since we downgraded, so I've been wrong on this one too.
yeah. It always just scared me that the take rate for institutional volume was so
It's
so
two
so
basis
much lower.
points. It's 2 basis points or three. It's
I think it's
nothing. It's
3 right
nada.
now, but yeah,
And you're paying, if you went and traded $100 of Bitcoin, you'd be paying like, I don't know, like multiple percentage points. I don't even
yeah,
know. And
yeah.
so that discrepancy has to converge. I mean, happened. It always happens. It'll happen again and again. To me, it's more about that yield support that worries on, on,
Gotcha.
on the underlying thing, and then like all the altcoins as well. Like, okay, so we can debate Bitcoin, but what's the scarcity value of whatever coin? The number 5,000, and three,
I
zero.
love the careful words for the all the viewers that watch that have a couple altcoins that you don't want to offend.
I don't want to offend any coins. Yeah, I'm like coin friendly.
Yeah, yeah. Dan, this has been an absolute pleasure. I really do
Yeah,
appreciate you coming on.
anytime. Do it again if you want. This was great. Hopefully, I don't look like an idiot with my firm prediction for tomorrow, but you know, um, all we can do is try to do good work and thoughtful analysis and be right more than we're wrong.
Right, right. And some people forget that. I find like you can have a success rate of 70% and people point out that 30. Um,
Oh yeah. I mean, I think on the buy side, if you're 51%, you're like one of the better ones.
yeah, yeah, sure enough, right? All right.
100%.
Well, where can people find you? Do you use X?
I'm obviously on LinkedIn, but I also have like an ex Twitter, whatever. Yeah. It's like Dolev at Dolev, I think, the
Okay,
Twitter handle. Not
perfect.
big, not big there, but I am exploring it and it's kind of fun.
Well, maybe this will be your start to your new.
This is my big break. Yeah, 100%. I'm gonna get into like a Twitter fight with Elon. That'll be fun. That's it. I'm gonna get kicked out after this.
Ladies and gentlemen, thank you so much for watching. Really
Thank
do
you very
appreciate
much.
your time. But bye for now.
Thanks, Tim.